Good morning, everyone. We are all aware of the existing Ukraine and Russia crisis as of now. What does it mean for your investment and economy as a whole? Number one, we have been seeing the sharp rise of energy and oil prices over the last couple of weeks. As we speak, crude price is $101 per barrel. What does it mean? It will increase the inflation across the globe, including India. So, various government can take up steps to increase the interest rate in different countries, which is going to impact the equity market. Number two, we have been telling consistently in all my webinars that there is a widening gap between inflation and the bond yields in US. These escalated situations can further aggregate these situations, and you can see Fed taking a firm decision of increasing interest rate, probably not very soon, but in a couple of weeks or months time from now, which is again going to impact foreign flow and the equity market across the globe. Number three, with this crisis happening, you can see a geopolitical shift, and you should not be surprised if you see rupee crossing $80 per mark. So these implications will going to happen in a short-term perspective from now on, probably 6 to 9 months period of time. So what should you do with your investment? I always tell during investment that you should follow asset allocation strategy. You should have set aside your emergency fund. If you have not done that, if you will be requiring funds in next 6 to 9 months period of time for whatever reason that you have, whatever books you have, you can set aside that in a liquid asset. If you do not require funds in next 6 to 9 months, or you have a 3+ year of durations, do not do anything with your investment. If you have invested in good funds or good company, what is the meaning of good funds or good company? Company with having a good corporate governance, strong balance sheet, good product and service line, and attractive projects in a pipeline. You don't need to worry about that. It's as simple as that, giving an example that if a children is getting consistent good marks in a school and colleges over a period of time, in one semester, if he or she fall ill, fall sick, or fall fever and do not get the desired marks, do you think it doesn't really matter to her future prospect? So if a good company you have invested in, even if you have invested a week or 10 days back, and if your C is going down, you don't need to think anything about it. So what exactly happened that when you see a graph in 1 month's period of time, you see the much volatility. When you stretch the graph for over a period of time, suppose say for example 3, 4, 5 years, this small volatility will not even actually figure in that entire graph scenario. So if you have invested in good company or good funds, which have a consistent track record and all the parameters which I have said right now, do not do anything. If you are continuing with an SIP or STP investment, do not do anything. This is the best time to get rupee cost averaging. Coming 6 to 9 months, market will be volatility for sure. So that's my recommendation for all of you. Don't get panic. So another important point, yesterday I have seen the track record. If you have invested in asset allocations kind of product, it has fallen by only 0.92% with respect to Nifty, which has fallen 4.77% yesterday. So you know what I mean to say. Asset allocations are those products where they normally invest in gold, equity, silver, debts, and mixture of all this thing, and it's dynamic in nature. So normally what people try to time the market whenever there is a happening of this kind of happen, and they forget about the incidental cost associated with it, the short-term capital or long-term capital gain tax, the kind of all other adjacent costs associated with, and that's what people make mistake. We have seen the same mistake happening where I told investor in 2020 when the market was at 42,000 level, we have a COVID outbreak and market fall down to 25,000 level. I have told that time also, don't panic, stay invested. A lot of investors hurt, a lot of investors do not hurt, and those who have not hurt, they have suffered losses. So don't try to book your losses, and we have seen what exactly happened after that, from 25,000, 60,000 level. And another important point I want to make is that in the last 5 months, there has been a 70,000 crore outflow of the foreign funds, and there has been a 1,50,000 inflow of the domestic investor and the DII into the Indian stock market. What does that mean? That every month there has been a 30,000 inflow as per Indian domestic investor goes into the Indian stock market by way of provident fund investment. There are 5 to 7% mandatory investment of provident fund has to be in the equity market right now. Plus there is a huge amount of automated investment happening in the stock market by way of SIP, by way of ULIP, by way of other lump sum equities and all those investment. So it is not like 2008-9 when you have seen a huge crash in the market because this thing happened. Right now the situation has changed. We have 30,000 approximately amount of investment growth happening every month automatically, even if this is the short-term implications. you will not have to bother much. If you have a long-term vision like 2 years, 3 years, 4 years plus kind of duration, and if you have invested in good funds, good stocks, don't need to worry at all. Okay. In case if you think your portfolio is not working fine, if you have invested not in a product which is not giving good return over a consistent period of time, not for 1 or 2 or 6 months or 8 months kind of thing, you should consult a professional financial advisor to get more updates about it. Do watch me on 12th of March. I am going to have a sessions on investor awareness program on financial products, its pros and cons, in a very unbiased and informative way. It's a 1-hour sessions. Do not miss that. The description link of the program is given below. Thank you very much. Stay invested. Do not panic. This short-term correction is a good enough for you to re-enter the market in right valuations. Do reach out to a professional financial advisor to get advice which really does matter to you. Thank you very much.